Bloomberg Audio Studios.
Podcasts, radio, news.
This is the Bloomberg Surveillance Podcast. I'm Tom Keene, along with Paul Sweeney. Join us each day for insight from the best in economics, finance, investment, and international relations. You can also watch the show live on YouTube. Visit the Bloomberg Podcast channel on YouTube to see the show weekday mornings from 7 to 10 a.m. Eastern from our global headquarters in New York City. Subscribe to the podcast on Apple, Spotify, or anywhere else you listen, and always on Bloomberg Radio, the Bloomberg Terminal, and the Bloomberg Business app. Lori Calvasina joins us this morning with all of her good work. Lori Calvasina, of course, with RBC. Lori, I'm just cut to the chase. Many would say in this odd rebound, this 10-day hellacious horror we've been through, that there's been a massive short cover on small caps. Are you committed to small caps this morning?
Hi, Tom. So look, I hate to say it, but I still feel pretty neutral on the small caps. Now, that's in regards to a relative call versus large. I do think the market is at large, small caps included. Probably did see the lows for the pullback we experienced on August 5th. But when I think about relative performance, look, I think one of the things that's really been pushing people into small caps and that's been generating some of these short-term outperformance pops is when the absolute valuations of the Russell 2000 are cheap. So that weighted median forward PE is below average. And guess what? As we updated the weekly at the end of last week, it was sitting right smack dab on top of the average. So we don't have, sort of the same kind of compelling valuation setup. Similarly, if I look at positioning on the CFTC data, we recently pulled up to 3-year highs, kind of post-COVID highs. And we've started to ease back from those, but they don't look under-owned at this point in time. And then I layer in the economy. I neither think we're about to tip into a recession. That's usually a really big springboard for small caps. And I also don't really see a hot economy. I see kind of a good, solid, fine economy, but small caps really either need the springboard coming out of recession, where you get really fast growth rates off the bottom, or you need a really kind of hot above average economy to outperform it. I just don't have that right now.
I got 14 questions with Paul. Jump in here. I just don't get it.
Hey, Lori, I mean, we're pretty much through the earnings season here. We've got some retailers reporting this week. What did you take away from this earnings cycle, good, bad, or indifferent?
So I think it was pretty solid. I do think in some ways it got ignored with all these sort of macro gyrations, sort of debates over the consumer and the jobs, and then the yen carry trade unwind, which I know we'd all kind of like to forget right now. But I do think if you looked at the stats, we saw an uptick on the percent beating consensus earnings estimates. The revenue beats also picked up. The earnings beats kept outpacing the sales beats. And that just means companies are doing a good job of, kind of defying gravity, so to speak, and really managing margins. So that was all good. I thought the commentary was pretty balanced. There was maybe a bit more negativity on the consumer than what we saw last reporting season. But I came away with the impression that while the pressures from rates and inflation, consumers are reacting to that in a more profound way, companies went out of their way to sort of say, we think the consumer is still healthy and that they're managing through. So I thought it was pretty solid, to be honest.
Solid enough to support the valuation where we are in this market. How do you guys think about valuation of this market these days?
So we look at valuations a lot of different ways. If I'm looking at, sort of a forward PE, what I really like to do is separate the top 10 names and look at by market cap and look at a median PE there. That's still trading around 26 times. It got as low as 24. It was up around 32 at one point. Doesn't look great, but it's off the boil. If I look at, sort of the rest of the market, we've been sort of, really trading closely around kind of the 17 times mark. The average is around, sort of, I think around like 15 or so. So we're a bit above average, but we're way below past peak. So I think valuations, look pretty good for the rest of the market. If I look at a trailing PE analysis, that's where I kind of come away with the idea valuations are full. And I'll spare you all the details on the model, but I basically take inflation and interest rates in the Fed, do regressions with trailing PEs going back to the 60s, and we figure out where should the PE be at the end of the year if you think X, Y, and Z is going to happen on rates and inflation. 5,600 is already baking in, sort of 3 or 4 Fed cuts and PCE down around 2. So I feel like we've already baked in a lot of good news on the rates and inflation front, just on the S&P multiple itself.
But in that regression equation, how do you plug in a presumed lower real rate, the oomph the economy gets from a lower real yield?
we've got kind of all the bits and pieces there, right? We've got the 10-year, we've got the Fed funds, we've got the inflation rate. I'll tell you, Tom, I may lose some of your viewers right now, so I apologize if we do that. But I did experiment with this model at one point in time, having GDP baked into the model. I finally, sort of threw it out of the model.
Yeah.
It didn't have a huge impact on the outcome, but I found GDP behaves differently relative to interest rates in different decades. So inflation, the Fed, 10-year yields, pretty much always inversely correlated. GDP, sometimes inverse, sometimes positive.
Lori,
I don't want to mess with that.
Yeah, Lori, thank you. Too much math. Lori Calvasina, thank you so much. Kelsey Berro joins us, Executive Director of Fixed Income at JP Morgan. Thrilled she's with us today. Your arch call with Bob Michael is yields are coming in. 10-year yield, you're talking below. I mean, Ian Lingon's out there and then other strategists with calls, but the basic idea is we come down. Paul, I'm looking at the corporate chart, yield to worst back to Volcker. It's the great moderation, the great disinflation. We're out 3 standard deviations right now, folks, which means we've never been here. And a regression to the mean, Kelsey Berro, just gets your price up, yield down. Is that all JP Morgan's talking about? Is a regression to a great moderation mean?
So I'm looking at the same chart you are in terms of investment grade yields right now.
We're the only 2 people that have access to it, folks.
5%, right? A yield to maturity on the investment grade index right now. I think what's amazing about that, and that's come down pretty significantly, from the highs, was above 6%.
Yeah. That's
actually still in the 80th percentile of the last 10 years.
On this show, we call that 3 standard deviations. But
Right, another way of saying it. I think the big question people are asking now is, have we missed the move? Because, we're now 13 months from the last rate hike. And if you look at 1 to 5 year credit, for example, that's about 200 basis points ahead of cash right now. And the Fed hasn't even started cutting rates. But we also know that the market is pricing in a significant amount of rate cuts, 8 to 9 rate cuts. So, the question is, what's the risk reward from here? Now, there's 2 tails that I'm thinking about. One is the reacceleration risk. One is the risk that we go into a harder landing. I think what the data has been telling us more recently, we can debate about the risk of recession, the risk of rolling over. The data is very mixed on that. But the one place where it's really clear is that the reacceleration tail risk has come down quite a lot. And that's really the big risk for bond investors. And that's the good news for fixed income, is that we've really been able to credibly reduce that tail risk of a reacceleration in inflation.
So if I'm the Fed, I go out to Jackson Hole with all the mucky mucks end of this week, including Mr. Tom Keene. What do I say?
I don't think you really need to say that much. It's really interesting. You think about the price action this year, and it's really not been driven by the Fed speak. It's been driven by the data, right? Okay. The market has reacted to the data. When the data suggests that there's risk of upside on inflation, the market reduces the amount of rate cuts for this year. When that unwinds, the market prices in more rate cuts. So I actually don't think that Chair Powell needs to say that much. That being said, though, I think it should be clear that if you look at simple policy rules, they would suggest, and this is regardless of your view on the labor market, simple policy rules would suggest that the appropriate policy rate right now is probably about 100 basis points lower than it is today. And that's just on inflation coming down alone. Because the Fed, they don't see the Fed funds rate static for the last 13 months. They actually see the real Fed funds rate has risen 150 basis points in the last 13 months. That's equivalent to 5 more rate hikes. So policy has been getting incrementally tighter for the last year. And they recognize that it's time to kind of start to move away from that regime.
So when the Fed begins to cut rates, let's say it's September as the market's discounting, how do they do it? Do they do it every meeting, every other meeting, 25 basis points, 50 basis points, so they front load? How are you guys thinking about that?
So I think for now, it's still a gradual adjustment. So you could plug in those simple Taylor rules on your Bloomberg terminal and see that, okay, the policy rate maybe should be closer to 3.5 to 4, but they're not going to do that instantaneously, right? I actually think that they are more likely to go 25 basis points per meeting, maybe for the next few meetings, and then switch to quarterly. But that's all assuming status quo, and we don't know where the economy is going next year.
Do you have a crystal ball in your office?
No, we don't have a crystal ball.
Maybe the new offices, Tom, when they go into the new offices.
The new offices now have a crystal ball.
Yep.
I got a huge response to this out on YouTube. The basic idea here is if I get a Bob Michael, Kelsey Berro market, and I don't get down to reversion to the mean, I just get down to a long-term trend, one standard deviation above the mean, I have a total return vehicle. At JP Morgan, are you investing in fixed income for an assumed total return, or are you clipping a coupon?
Well, so far it's been a little bit of both. Fair. Is what we've gotten so far, right? You got a little bit of total return more recently, and then more so, the majority of what you're getting is clipping the coupon. But I do think, over time, you are going to see that fixed income is going to continue to outperform cash as the Fed continues and starts that easing cycle.
I mean, Paul, to me, this is huge. Nobody has in their minds fixed income is the giant Dan Fuss at Loomis Sales. Yep. Nobody's thinking in the Dan Fuss manner.
Yep. I'm looking at, Kelsey, INGO on the Bloomberg Terminal, Bloomberg Index Browser, the best returning fixed income space, U.S. corporate high yield. Mm-hmm. Where did that come from? I thought we were having a recession. I mean, how's high yield doing so well?
Yeah, so I think really that's a combination of the fact that the economy has continued to do well, and that's really a story of clipping coupons. The index with the highest yields has performed with the greatest total return so far, and that's because spreads have been relatively stable. Right. So if you think about what our core thesis was for this year in terms of base case for investing, it was soft landing. And the key part of that was inflation coming down. You need inflation to come down for any of these things to work, right, in the bond market. Fair. Okay. Without that, you can't have any of it.
What's Ferroli telling you?
I think what we're seeing in the data is that the disinflation is becoming much more broad-based, and outside really two categories left in inflation, which is shelter and auto insurance, pretty much the rest of the CPI basket is running like it was pre-COVID.
One final question, because we're going to throw you out because the Detroit Tigers beat the Yankees. Kelsey, the heart of the matter is what are people doing with their money right now? Is any of the cash being deployed into the Michael Berro world, or same thing, are people extending duration?
I think they are, and I think the ways you can see it in fund flows, but I think you can also see it in the continued demand for corporate credit. Supply has really been pulled forward this year ahead of the elections,
that's like the fourth time we've heard that, Paul.
Yeah,
smart people. I don't know.
And people are very interested in extending and snapping up that credit, because companies in general, they were preparing for a recession. The recession didn't happen, but the good news is that their balance sheets are in a very good place.
Help me here. Why doesn't big tech, they make one phone call? They don't call James Dimon. They call Bob Michael. Let's be honest. Big tech's going to make one phone call, and they're going to do gazillions of debt issuance. And how many people does JP Morgan have to call to get that deal done? Like 4 people?
Yeah. Well, they just call upstairs to the investment management people, and then they say, I'll take the deal.
The demand, I think it's going to be a frenzy if we get some form of reversion to the great moderation. Do you see that?
Yeah, I mean, and you think about it, you've already seen institutional investors, extend duration, but this has happened without an actual cut, right? Like money market rates have not moved yet. But I think when they move, you're going to see a lot more people start to notice. Okay,
Kelsey Berro, thank you so much. Terrific brief. Kelsey Berro, working with Bob Michael and the team at Fixed Income at a small bank on Park Avenue. Greatly appreciate her attendance. We're doing Audible here with Henrietta Treyz. Thrilled that she's with us today. She's been a huge help to Bloomberg surveillance and identifying the trends. Henrietta, I usually start with some, mumbo jumbo in the zeitgeist and that, but I think we have to address the Chicago protests. And the difference is in 1968, after the Tet Offensive, there was clear, visible the word I use is substantial divisions within America. To you, as a grizzled pro, how narrow is the Palestinian-Israeli debate and the Palestinian protests talked about in Chicago? It's not 1968, is it?
It's definitely not 1968. Thanks for having me, Tom. I think the first thing to note is that the protest is going to be about a mile long. They have moved it away from the convention. I'm sure, I know that the Democrats have anticipated these protests. I think that the biggest area of concern for them is the state of Michigan, which there is a big population, about 300,000 people who are even in the range of focusing on this the way that the protests would suggest. And in general, this is a really small subset of the Democratic voter base. And I don't think that it's going to move the needle in terms of polling or ultimate election outcomes. But it is there. It is present. Kamala Harris is making clear that she stands with Israel, but doesn't have the same baggage that the Biden administration has on this. And I think that's going to help her.
I mean, Paul, the reason I bring this up, besides that, the analog back to 1968 and all, is I'm looking at outside adults like Pew Research Trust.
Right.
Or the great work at Cook Political Report, what Henrietta does at Veda Partners, Greg Giroux at Bloomberg. And as she mentions, Michigan's unique, okay. But other than that, I can't find a critical mass of protest in America.
No.
I mean, we can protest the Red Sox middle relief.
Exactly.
That's got a bigger support.
The Yankees, losing it in the 10th last night.
Interesting.
Henrietta, what would be, or what will be, or what could be a success for the Democrats this week in Chicago?
Honestly, a continuation of the success is maybe talking about the more popular parts of Kamala Harris's economic plan, get that out there into the ether for voters who don't have a strong sense of her policy, to the extent that any concerns about her policy positions are a problem for voters. What we've seen in the polling data so far is that, she's risen anywhere between 5 to 8 points in all of these swing states. So voters aren't really concerned about her policy, and they're very primed to be opposed to Donald Trump, which is why he's lost every election since 2016. So I think getting a little bit of a message out on policy, but not too much, is probably the strategy. Keeping the good energy going. President Biden will speak tonight. We'll keep forward with that. I think there's a lot of folks waiting to see where Michelle Obama comes out. But Barack Obama will be there, Hillary, Bill Clinton. It's just a big rah-rah. Yep. And I expect that polling will continue to reflect the boost that either party gets from a DNC or an RNC, which is 2 to 3 points. And that point basis, once it gets tacked onto the polls next week, is going to be sufficient to put her outside of the margin of error in all of these swing states. And that's a big problem for Trump right now.
How concerned is Donald Trump and, I guess more importantly, the Republican Party at this point?
Very concerned, from House members who were hoping to pick up all 10 of the toss-up races in the House of Representatives. The senators that are not in Ohio and Montana are really concerned. And then at the top of the ticket, I think you can see it from the change-up that they're doing at the campaign staff. I think maybe they finally seized on a campaign message trying to tie Kamala Harris to her economic policies that she rolled out on Friday. But one thing I'd really point out there, and where I'm spending some time digging into the data, is that when inflation was 9%, a month later, Democrats went on to keep House Republicans to the lowest majority wins of any minority party in 100 years. So I don't know that the inflation stuff is going to beat out all the rest of it. And that's what history has suggested in the midterms and the 2020 general.
What do we vote? I mean, I know we don't vote on foreign policy, but do we vote on border debates, immigration debates? Do you buy the cliche it's all about economics?
Man, it's really tough because 2020 was not about economics.
Yeah.
I think that Biden narrowly won because of COVID and because of President Trump's response to COVID at the time and sort of the chaos of that administration. And then in 2022, as I suggested, inflation was 7, 8, 9% that summer, just a month before the actual election. And Democrats somehow still held the United States Senate, which was shocking. So I think voters are quick to say that it's the economy. It's perpetually the number one issue. Inflation is right up there, but it's followed very closely by immigration and abortion. And turnout is really the name of the game. The gender gap is where you should probably pay attention to that issue.
Give us a window into Florida politics. I read Cook Political Report. Amy and David had a really interesting study of, I think it was 5 of the districts, including the tippy tip of Western Florida where Getz is. But give us the red-blue Henrietta Treyz view on a key state like Florida.
It's funny, you're speaking my language. I was just in Seaside last week with where Matt Gaetz' dad lives in his district. So I feel you. There's a lot of Trump supporters down there. It's very MAGA nation. There's buildings with huge billboards and property owners willing to pay the fees for having political propaganda up year round. I mean, it is definitely a little insular world right there. But Florida, look at Rick Scott, the senator there, who has poured money into his campaign. I believe the latest campaign donation he gave to his own cycle was over $100 million. And he has an underwater approval rating with both Republicans and Democrats in the state. And of course, as you know, in Duval County, in the Jacksonville area where my parents live, you have a Democratic surge in the down ballot races and the mayoral candidates, et cetera. So I think Kamala Harris is trying to spook Republicans into spending a lot of money in Florida. I think that's a smart strategy. And that's the goal right now, is just make Republicans play defense in that state.
Henrietta Treyz, I'm sure we'll talk to you later this week. Thank you so much for your commitment to the show, The Value Add from Veda Partners. You're actually prepared today, Lisa, because you didn't visit Costco this weekend.
I didn't.
Right?
I saved myself $500. That's what I did. So yeah, summertime. There's not much going on. I broke a sweat looking for newspaper stories this morning. Okay, but this one stood out to me. This was in the New York Times. Around New York City, we have the horse-drawn carriages, right? All over New York City.
Love them.
Yes, everybody loves them, but there's controversy behind them. You have the animal
others
activists.
Disagree with
others
me.
disagree, right? So in Brussels, they're actually switching to electric drawn carriages instead of the horse-drawn carriages. Okay. They became the first European capital to do this, offer those daily tours. And the carriage operators, they're telling the Times that they're just tired of getting these angry remarks from tourists about animal cruelty. A lot of them are selling the horses, using that profit to buy electric carriages. They say, hey, now they don't have to pay the high cost of taking care of the horses. They also don't have to worry about canceling tours because it's too hot for the horses. And they're saying they're getting just as many people signing up for the electric cars as the horse-drawn cars.
I can't disagree with that. I mean, I was fortunate enough to live in the varied climes where I could hear the horses clip, clop, clip, clop. And in my, idiot Victorian fantasy, it was wonderful. But why not?
Yeah.
Why not have an electric?
We still have them in New York, right? We still have the horse-drawn.
We still have the horse-drawn carriage.
I didn't know that. We still have
them in the city. I actually, long story short, got engaged on one of the horse-drawn carriages in New York City.
Oh, that is perfect.
And the marriage survived?
And 25 years later.
Oh, my word. Paul, we should be taking notes.
Oh, boy.
Next, quickly.
Okay, Wall Street Journal. They were talking about how these discount airlines like Spirit and Frontier, they're now offering a lot of these bundle packages. They're calling it, one flyer called it the poor man's first class. So they have all these different packages where you can pay one price to get like in-flight Wi-Fi, your checked bags for free, extra legroom, cocktails, priority boarding. So this is the way that they're trying to get more people because it's getting so competitive out there. So they're trying to do these bundle packages. Like for $100 you could get this. They have a business bundle. They have a go big bundle that'll cost you maybe $200 extra to include all these things. So they want to be a little bit more transparent too. That's the other thing.
Where are airfares these days in general? I've not booked a flight in forever, so I'm not even sure where airfares are. I mean, I know Tom prices JFK to Paris daily.
But they're saying that's the reason.
It's competitive out there.
The regular airlines are starting to drop their prices, and now these discount carriers are saying, well, we got to do something.
Funny you should ask. I had to do a Paris, New York thing this weekend for one of the Offspring. And I was surprised now there's economy, like bare bones economy, you're taking, a little bag on, and then a substantial markup to have a suitcase. Mm-hmm. So that's that a la carte thing going on.
It's just crazy.
It's crazy.
It is crazy.
I don't get it, but that's the new level
I'm
of
flying to Dublin next month, and it's not business. It's the first time I've gone to Europe, not business first class in my lifetime. I don't know how this is going to go, but we'll have to see.
It's going to be good. It's going to be good.
Yeah.
So we had talked about Disney, right, revealing their plans for theme parks. So now Universal Destinations, they're the theme park business owned by Comcast.
Yep.
They've acquired like 500 acres as a potential site for Europe's largest theme park.
Really?
So they're saying, they're talking with UK officials about tax, other infrastructure incentives. But sources saying Comcast could look into other sites in Europe, elsewhere in the world, but they're saying it could bring a lot of significant money, also a lot of jobs to the area. So it's interesting, kind of coming and expanding in Europe.
I'd say the theme park business for both Disney and Universal, which are owned by Comcast, as you mentioned, Lisa, they're getting huge investments. I mean, Disney's going to put in, I think, like $60 billion over the next 10 years just in the theme park and cruise business, launching boats and new theme parks. And Comcast doing the same thing. It's a good business.
Is your radar up on that?
Yeah.
To me, it's everybody's on board.
Everybody's kind of on board, but these are the two biggest players in the world, Comcast and Disney. So, but people are spending, on these types of things.
Jonathan emails, and thank you, Jonathan, for your interest in the show. How does Costco deliver 24% returns? Lisa Mateo.
Yes,
that's
exactly.
Right. Next.
I'm not sure if you noticed during some of the preseason football games, but some of them are wearing those Guardian caps.
Oh, yeah. What are those?
The padded,
protection?
they put it over the helmet, so it's more added protection.
It's protection.
So it's protection, extra protection. So the difference why you're seeing it now is because the NFL said that some players there can wear them during the preseason games, but a lot of players now are saying, hey, we might wear these during the regular season. So that's kind of the talk going on now is should these helmets be worn during the regular season games? Because now, since they said they can wear them during the preseason, there was one Colts safety, Rodney Thomas II. He tells the Washington Post, you know what? I might do it. I might start wearing these during the regular season games.
Those head injuries, it's extraordinary, and they're just long-lasting, long-term. I don't know how they deal with it. I know they've been making advances with these helmet technologies for seemingly forever, but I guess you can't be too careful, I guess.
I personally, I had a concussion in hockey when I was like 7 years old. I remember it clear as a bell with a baloney helmet on. But there was a thing called a Cooper SK20, and the few NHL players that actually wore a helmet at the time were not maligned, but it was not manly to do it. J.C. Tremblay of the Montreal Canadiens was an early adopter, and many others. And I'm sure Rich knows someone on the Rangers. And the answer is now we look back and it's just foolish.
Yep.
Could you imagine the game now? The game is different. The high sticking is different than it used to be because you could really hurt someone, but why not wear some poofy cushion thing on your head?
Yeah, well, some players say they don't like the look, the feel. It could affect their performance. That's the other side of it.
Yeah,
we've had in my family some experience with concussions, and I was shocked to learn how much doctors don't know about concussions.
Yeah.
They really don't. They kind of go in there, and this could last a week. It could last a lifetime. I'm like, that's it? That's what you got for us?
Good morning to Jeff up in Connecticut, who I skated with. He's done very well in Connecticut in business, and he had to stop playing hockey at 20 years old. That's all there is to it.
Yep.
This is the Bloomberg Surveillance Podcast, bringing you the best in economics, finance, investment, and international relations. You can also watch the show live on YouTube. Visit the Bloomberg Podcast channel on YouTube to see the show weekday mornings from 7 to 10 a.m. Eastern from our global headquarters in New York City. Subscribe to the podcast on Apple, Spotify, or anywhere else you listen, and always on Bloomberg Radio, the Bloomberg Terminal, and the Bloomberg Business app.